While the Fed's takeover of Silicon Valley Bank in California may seem just like a West Coast issue, as its customer base was tied largely to startup firms and riskier venture capitalist funding, we also saw the state of New York move to temporarily take over the New York City-based Signature Bank, linked with equally risky digital or cryptocurrency customers, a move to also calm the market.
This is not a bailout of government taxpayer dollars. This is simply using fees that are assessed on all banks. We don't have any evidence that anyone else is in a situation like Signature at this moment. But again, we want to make sure that there's not a ripple effect because of people getting anxious, start withdrawing.
And from a former Treasury Secretary,
the broad approach that was taken to close SVB while supporting its depositors and to make available support to the banking system more broadly, I think that was the right approach, and I think it will insulate the economy.
Finance professor Christian Hugh with the UB School of Management said there should not be comparisons with the 2008 financial crisis when banks faced major losses with a collapsed mortgage market. But he does say the Federal Reserve's tricky balancing act of interest rate tweaks on inflation is a factor for banks competing for customers.
The fact that the rates change so unexpectedly makes it very difficult for the Treasury, essentially, of a bank to navigate this environment.
He emphasizes our local banks are much different.
I don't think the local banks have a depositors base or have clients whose business volatility is so high that overnight then they'll walk out of the bank with the money. I don't see that risk at play here at all.
So M&T's bank shares price dropped about 3%, but the stock price of Cleveland-based KeyBank dipped significantly before stabilizing to close just down by just over 27%, pretty much expected for bank stocks today. Ron Plants, Channel 2 News.